So here I want to share with everyone on how I took this trade on gold on the 31st of May during the Asian session, right, at 8 o'clock. So as you can see, right, price made high highs over here. So when did it start shifting bearish, right? When bearish structure starts when this bearish 4-hour bearish candle closes below this 4-hour support, right, and we continue to trend down, right? So when did it start turning bullish? When price broke this 4-hour resistance, right, during this closure at the New York session, on the 4-hour time frame, we turned bullish, right? So in the morning of 31st of May, which is Asian session during the Singapore timing, right, we can see here closure. So what I did was, when I woke up, identified that 4-hour closure, drop down to the 1-hour time frame to see whether there is any counter trend opportunities, correct? So how do I define a counter trend, right? So my main overall trend direction is on the 4-hour time frame, and how I will take counter trend trades is that when a 1-hour level breaks. So as you can see here, right, we have our 4-hour closure over. We have our 4-hour closure at here, 9 o'clock, right? So from 9 onwards here. So this is the 4-hour closure, and as long as we don't break, so price will continue to form its structure, and as long as we don't break this level, right? As you can see, we don't break this level here, price is still bullish. As long as we still respect this level, price is still bullish here. So when I wake up at 8 a.m., right, see here, this is the 8 a.m. candle, price is still bullish, right? So for price to be bearish, what it needs to do is to break this level. So price is supposed to break this level, give us a retest for an entry, and then drop down, right? So this will be my counter trend strategy, but in this case we're still working with the 4-hour trend. So 1-hour and 4-hour is bullish. So what I did was to drop down the 30-minute time frame, and as you can see, 30-minute was also bullish as we broke above this level here. Broke above this this level. We broke above this level over here, right? So price is still bullish, and as you can see, right, when I woke up 8 o'clock, this is our trade opportunity. So right here, bullish. So what I did was to mark up my zone, right? And how do I mark up my zone? Is when we have this, when you have a bearish candle and a bullish candle, right? We have my areas of interest would be the support and resistance of that area, right? So support, meaning here, price can tap in here for a trade opportunity here on the 5-minute, or it can also tap into this level for a trade opportunity on the 5-minute as well. For the support, what I'll do is to draw from the candle closure all the way to the wick, right? But for the resistance, what I want to do is to only get the wick of the for the case of resistance, right, what I want to do is to take the wick of the bearish candle up to the candle close, right? So this will be my area of interest on the 30-minute time frame for potential trade opportunities. So then I'll drop down to the 5-minute, wait for a 5-minute reaction. So drop down to the 5-minute, here's the 5-minute chart, right? Wait for a 5-minute reaction, right? So this was the 30-minute level as I drew earlier. 30-minute level, price taps into the 30-minute level, form a bullish engulfing structure, and I will enter my trade over here, right? So what I did was to draw, to use this flip retracement tool, draw it out, enter the trade here upon the close of the 5-minute candle, place my stop loss below the structure, which I will usually place on the 1.15 level, and set my take profit on the 1.55 level, right? So this is what I'll do. And so this trade gave me a 1.3 risk to reward, which is very decent. 1.3 risk to reward. So that's how I entered based on the higher time frame trend direction, lower time frame entry confirmation, right? So this is how I did it. And as you can see, I have two lines over here, right? So what these are, right? The blue line is the 20 SMA. Oh, sorry, this is the 14, but let me change it to the 20, right? I use the 20 SMA, right? But as you can see here, 20 SMA, the source for the blue line is the high, and the source for the red line is low, right? So this is the 20 high, 20 low, the average of 20 candle highs and candle lows. So what I usually try to look out for is also when price taps into the level. For buys, I would make sure that the price is trading below or printing below the 20 low, the 20 SMA low, right? So this would represent a discount in current price action for me to potentially take better buy opportunities up towards my take profit. So same goes for sells, right? What I will do is to wait for price to trade above the 20 SMA high source, and this will give me a better opportunity or better position myself for trades to take it to further downside, right? So the concept of this is also similar to liquidity, right? Or to getting a better price, right? Because what you don't want to do is to be buying here and then price stops you out, and in the end it moves into your direction. So what I found was that using this 20 SMA high and low would give me better opportunities in the market, right? So this is how I took my trade on Friday morning, 31st of May.